There are moments in life when money needs to move fast and for certain. Buying a home, sending a large payment overseas, settling an important transaction where there is no room for delay. In these moments, many people reach for a wire transfer. It feels powerful, almost final. But that power comes with rules and risks that everyone should understand before they ever send one. A wire transfer is an electronic movement of money from one bank account to another, processed individually rather than in batches. Unlike many routine payment systems, a wire is handled as its own single instruction. The sending bank tells the receiving bank, through a trusted network, to move a specific amount to a specific account. It is direct, deliberate, and built for situations that demand certainty. Wires come in two broad types. Domestic wires move money between banks within the same country. International wires move money across borders, often between different currencies and banking systems. Domestic wires tend to be faster and simpler. International wires involve more steps, more parties, and sometimes intermediary banks that help the payment hop from one country's system into another. To send a wire, you usually need precise details about the receiver. Their full name, their bank, their account number, and a bank identifier code. For international wires, that often includes codes used to identify banks worldwide. The sending bank uses this information to route the money correctly. A single wrong digit can send a payment astray, which is why accuracy matters so much here. Speed is the headline feature of wire transfers. Domestic wires often complete the same business day, sometimes within hours. International wires may take 1 to several business days, depending on time zones, currencies, and intermediary banks. Compared to slower batch payments, this speed is the main reason people choose wires for urgent, time-sensitive, or high-value transactions. That speed comes at a cost. Wire transfers usually carry fees, often higher than routine electronic payments. The sending bank may charge a fee. The receiving bank may charge a fee. For international wires, intermediary banks may take a small cut along the way, and currency conversion may add a margin. So a wire is not the cheap option. It is the fast and final option. Now here is the most important point about wires. They are designed to be fast and difficult to reverse. Once a wire is sent and received, getting that money back often depends entirely on the goodwill or cooperation of the receiver. There is no easy automatic undo button. This finality is exactly why wires are powerful, and exactly why they are dangerous in the wrong hands. Let us look at a healthy example. Imagine you are buying a home. At closing, you must send a large sum to a verified account. You confirm the wire instructions directly with a trusted, known party, using a phone number you already had, not one from a sudden email. You send the wire. It arrives the same day. The transaction completes cleanly because verification came first. Now let us look at the dark side. Wire fraud is one of the most damaging scams in personal finance. A criminal might pose as a real estate agent, a vendor, or even a family member. They send urgent instructions to wire money to a new account. The victim, feeling rushed, sends the wire. By the time the fraud is discovered, the money is often long gone. This is why one habit protects wire senders more than any other: independent verification. Before sending a wire, especially a large one, confirm the account details through a separate, trusted channel. Call a number you already know. Speak to a real person. Never rely solely on instructions that arrived by email, text, or sudden message, particularly if they create a sense of urgency or secrecy. Urgency is the favorite weapon of wire fraud. Scammers know that a calm person checks details, while a panicked person obeys. They invent deadlines, threats, and emergencies. So a simple rule helps. The more urgent a wire request feels, the more slowly you should move. Real, legitimate transactions can almost always survive a short pause for verification. Fraudulent ones often cannot. Let us compare wires with other options. Routine batch payments are cheap and good for recurring bills, but slower. Card payments offer strong dispute protections, but are not meant for large transfers. Wires are fast and final, ideal for big, urgent, verified payments. Each tool has a job. Trouble usually begins when someone uses a wire for a situation that did not really need one. There are also legitimate, everyday reasons to use wires. Buying property, paying for large business transactions, sending money to family in another country when speed matters, settling escrow or legal payments. In all of these, the value is real. The key is not to avoid wires entirely, but to use them with the seriousness and verification habits that their finality demands. When sending an international wire, expect a few extra wrinkles. Currency conversion means the amount received can differ from the amount sent, due to exchange rates and margins. Intermediary banks may deduct small fees. Processing can pause for compliance checks. None of this means something is wrong. It simply means cross-border money movement passes through more hands than a simple domestic transfer. What if you make a mistake, like sending to a wrong account? Contact your bank immediately. The faster you act, the better the slim chance of recovery. Banks can sometimes request a recall, but success depends on whether the money has been claimed and on the receiving bank's cooperation. This is why double-checking before sending is far more reliable than hoping to fix it afterward. A few simple habits make wires much safer. Verify recipient details through a known, separate channel. Be suspicious of any last-minute change to payment instructions. Never let urgency override your checks. Keep records of every wire you send. And when a wire is large, consider sending a small test amount first when the situation reasonably allows it. Small steps prevent large regrets. It also helps to think about who you are dealing with. Wires work best between parties with a real, established relationship or a trusted, verifiable institution. They are riskiest with strangers, sudden online contacts, or anyone you have only met through a screen. If a situation pressures you to wire money to someone you cannot truly verify, that pressure itself is the warning sign. So here is the short version. A wire transfer is a fast, direct, individually processed movement of money between banks, ideal for large, urgent, verified payments. It costs more than routine transfers, and it is hard to reverse. That finality is its strength and its danger. Verify everything, slow down when rushed, and a wire becomes a powerful tool instead of a costly mistake.